welcome back, guys, to another premium session with DET. We'll just jump into the markets to begin with. I might just brush over stocks and then, yeah, we can have a look at ORDI, but no, Matt, no worries. We've got some people joining us. Hey, Ringo, good to see you, mate. All right, so how I'm going to run it today, I'm going to have a quick look at stocks, have a look at Bitcoin and how I'm sort of changing and adjusting my current strategy and the different ways that we can sort of see this play out. We'll have a look at ORDI, and I also want to touch on Ethereum. And if there's anything else that you guys want to look at, just chuck it up in the chat and we can get onto that once I've gone through those first few things. So we'll jump over to the charts. So I want to first look at SPX. Bounced off nicely from this level at 49.50. Which, let's see how much of a pullback that was. I had a 6% pullback pretty much and bounced off that. And in 4 weeks, it's back into pushing all-time highs. I'm assuming that I still haven't checked out what the CPI print was for yesterday. I'm assuming it came in cool, which has helped sort of propel that. But it's keeping up with this stage of the land cycle, the 18-year land cycle, the last 2 years, everything bull market. We have these corrections, and then it takes off again. And that's exactly what we've seen there. Mini correction here, took off again. Larger correction here, took off. So we'll jump into Bitcoin. I think going to an hourly time frame. I will try to clean up the chart a little bit as we go because it can be a bit much. Alright. Gone to the 4 hour. Alright, so I did post up this picture earlier in premium as a level that I am watching. Now we've got the golden pocket here. This is of the entire range from the all-time high to the 56k low. These are great areas for taking shorts or longs if it's on the retracement. We also have some confluence here with these significant tops here at 67k, which was the intermediate swing top, the high low. Sorry, it's a lower high. Basically, maybe I'll go to a daily time frame. It might be able to make it look a little bit cleaner. So basically, we've got the run up to the high, makes a low, makes a lower high, lower low, lower high, lower low. Now we're coming up. And because we've gone above this 50% level, we're now back into the bullish zone. So the sort of last area of resistance is going to be this top over here. And the for further downside, if you're a bit bearish and you think that this low is going to get taken out, you're really going to be hoping for a reaction off the 618. You don't want it to be going into the golden pocket and forming a double top. Then it can come back down. That would be the only really bearish case that is available to them. But in order for it to come back down, there we go. in order for it to come back down, it has to contend with these levels here, this support zone over here, plus we're just going to assume that it hits the 618. I'm pretty certain it's going to get close to it at least. Plus, it's going to have to contend with the 50% level at 62k. Golden Pocket actually has some decent confluence with this prior support before it can even look at getting back down below. So, we won't draw a fib. So one idea that I am sort of playing with is if it does come up into the Golden Pocket, does have a retrace, and comes down and hits this support zone, which we saw held up very well on Tuesday, I believe. Monday, Tuesday, something like that. Held up extremely well. And then we take off, and then that will confirm a lower, higher low. Or it may even come down a little bit and react a little bit earlier off the 50% and then take off. And then you've actually end up in that case with your low low. Depending where this goes, this could be the high low, or over here, that can be the high low. I'll just clean this up. So I guess essentially what I'm trying to say say with this is that the 56k low, it's not 100%, but it's definitely not 50-50. The longer time that we spend up here, the percentage of this being the low is just consistently increasing. And with this data, we need to now adjust our strategy, because if we're not going to be coming down and breaking lower, then it's unlikely that we're going to see the strong alt come down into the buy zones that we may have been trying to get into them at. And so we need to adjust that strategy as well. Alternatively, maybe 67k doesn't hold as resistance and it pushes through. So where can it then go? Well, we've got this zone here is resistance at around 71k. And then up at around 72.4, which is that lower high over here. That's going to be pretty critical. I think and it's a bit late, I suppose, but if you're watching the charts and you see the price take out this high, this lower high over here, it's going to be breaking out. I don't think it's going to form the double top at 74k and then come back down. It's had a lot of consolidation in this zone. I probably thought it was going to maybe consolidate a little bit longer. I won't lie. But we have seen these consolidation periods run from 6 months to down to about 2 months. So anything in between that 2 to 6 month period is still a good consolidation period. Majority of the time they do go the longer distance and sort of go to 6 months, but they don't have to. There is instances where they've been as long as 13 days or 14 days. But the problem with that is when it's only a very short consolidation, the reaction up isn't as high, and it can't hold that high level as long, and the retracement deeper. That's the downfall of having shorter consolidation periods. So I don't think it's going to be breaking out sort of within the next couple of weeks. I do think that there's a little bit more to play at the moment. It is prices are moving pretty quickly. So I do think we'll get to that 67K probably in the next couple of days before it maybe starts to turn around again and come back down. But I don't think it's going to come back down for too long either. I think it's going to be quite quick. So maybe within the next week, week and a half, we could see 67 comes down to that 62K region perhaps. Ignore the dates on the bottom of the screen, by the way, because I am on the daily time frame. And then perhaps in the last week of May, maybe first week of June, we can start breaking up above that 67K level. And maybe the middle of June, something like that, we could start considering breaking out to all-time highs. So that's what I'm sort of looking at the moment. Because once we do start getting this movement and it's starting to come out of the bearishness, it doesn't want to hang around too long to let people to fill their positions. Because this here is where the smart money is getting in that 60 to 65K region. And if you can get in below 65K, which was only down there for about a day, they're the very smart money. Well, definitely wasn't me. Although I did bag a little bit of near and Uniswap in that dip, but I didn't bag anywhere near as much as what I probably should have. But that's fine. But now that a lot of other people are seeing this on the charts, they're not going to want to give the majority the opportunity to finish filling up their portfolios before it starts taking off again. Any questions? I'll pause for a minute and see if there is any questions on BTC. G'day, Simon.
Hi, mate. I'm at the airport, so I can't really speak at the moment. But I was keen to want to know.
Yeah, no worries, mate. Sweat and also is an Ethereum always late bloomer in these bull runs? Yeah, I'm going to touch on Ethereum, mate. And we can also take a look at Sweat as well. All right, so just to recap on Bitcoin before we move on. In my opinion, this is highly likely going to be the low for this. It's going to be a swing low. We're going to come up this 67,200 level to 67,800 is going to be an extremely key level where I'm actually even going to consider taking a short in this region, back down to that around 62K level before taking off. And it's in that 62 to 60K level is where we're going to look to produce a high low. So that's basically where I'm at for Bitcoin. We had a request for ORDI. Well, not doing great. I remember looking at this last time. I was around $76 or something to that effect. So it is having a bit of a sell-off here. Not looking too good. We do have this, and this is on a weekly chart. Maybe I'll flip to a daily. It could give us a little bit more information. Yeah, so on a daily, it really isn't looking too great. Want to see it start taking out these tops over here at around $51, $52 for it to start changing its trend again. But that is almost a 50% move from its current price to get there. And where can the support come in? So on retracing, it doesn't have much structure over here whatsoever. They were just straight green dildos straight up. So we've got about $26, yeah, $26, $25 in that area would be a support zone. But it's definitely not trending in the right direction, given that we have had Bitcoin have a decent run. It's sort of fallen to the side at the moment. We can check it against BTC. Hopefully, there's a BTC chart. Yeah, that's still not looking good here. It's right on, bang on support at the moment on the Bitcoin chart. So we don't want to see it drop below 5,000 satoshis, which is the underside of the support. If it drops below that, then it's in extremely poor condition at that point. So if you are invested in it or looking to get invested in it, I'd be definitely watching this Bitcoin chart. And, if it does start getting below this 5,000 Satoshi level, is about 12.5% away, 13% away. I'll be looking to perhaps cut my losses and move into something stronger if you're sort of that way inclined. But it's not looking good on the USD or on the Bitcoin chart, in my opinion. I do want to touch on Ethereum. We might go to the FBTC chart to start with. We're going to jump into the weekly logarithmic for this chart. So it's really not looking great for Ethereum at the moment. It is still putting in lower lows and getting slowly but surely closer to my target zone. As you guys know, I've spoken about Ethereum before. It is my expectation for it to sort of come down into this purple zone. It doesn't have to. To be honest, I really don't care if it does or doesn't. But that's just based on my TA looking at the chart. That's my zone for it to pull back to. And I still am of the belief that Ethereum will outperform Bitcoin at the end of 2024. So, and that's based on the yearly chart. Which let's go to a yearly chart. I'm expecting this candle to be green come the end of 2024. May just be like a doji candle or a little bit green to the upside, but I am expecting it to be green by the end of the year. So take that for what you will. That's just something that I think is likely to happen. There's not a lot of data in this chart because it's a yearly chart, but last time we only got two red candles, and then we went green. So perhaps we can see something similar happen again. I might jump into the Ethereum chart. We can actually see how weak. Why don't you go on into an hourly? How weak it has been. Regular. Yeah, so it's still under resistance. 4-hour chart looks better. So I think it was either the public catch up or our last premium catch up, one of the two, where I just drew these trend lines for a falling wedge, and it's still respecting it. It's that the top trend line is clearly acting as resistance, because we have had Bitcoin breakout and it's put in, it's had close to a 10% day. And we'll see what Ethereum has done. So Ethereum's done about 5% for the day, which just really shows how much it is struggling and stuck in this wedge at the moment. But it's not a bad thing. The falling wedge eventually, might come down, test the bottom again, go up, and then it's going to eventually break out from it. We are seeing a bit of a bottom form here at 2,800. It's come down and sprung up, come back down over here and sprung up. The only problem is that we are seeing the bounces are getting smaller off 2,800. So I'll just delete these and all. So perhaps the next time we go down, it may break below to 2,600 and then spring out. Because if we go back and have a look at the BTC chart, go into a weekly chart. I've covered this before, but it's good practice, I suppose. It just rockets. When it gets going, it just rockets up against Bitcoin. Even over here, that's into the proof of stake swap over. It just pumps straight up. So watch this space for Ethereum. I think it's a bit of a sleeping giant. There is a fair bit of FUD out there that I'm reading about it, how it's turned inflationary now and it's not deflationary anymore, but it's negligible. It's like 1% inflationary, or I don't know the exact number, but it's fuck all really. It's nothing to be of any concern, I don't think. Bitcoin's inflationary, realistically. So I think that there's just a lot of FUD. I think most people are suggesting that the ETF isn't going to be approved, which is also creating FUD against Ethereum. Whether there's an ETF or not, I don't really think it's going to change anything too much for Ethereum. If it doesn't get approved, I think it's still going to go up. If it does get approved, I think it's still going to go up. It's just a coiled spring waiting to push up, and it will get its day. And we'll jump in and have a look at Sweat. Sweat has been struggling, and it continues to struggle, unfortunately, for the majority of us, if not all of us. We still can't get above this resistance line, the white line that we've had there for a little while now, a couple of weeks. So that's why we're really not seeing much movement, because it just can't get up there. Can't get into fresh air, into breathing space above the resistance. And we actually have a few resistance zones now. We've got this immediate one. Then we've got this one here at 114, give or take, which was the resistance when we were trading back in this zone. It was the resistance when we came up to it initially for a short period. It flipped to support as well, as we can see when we were trading really well. So this zone here is going to be difficult to overcome as well, in my opinion. And we can also add in another line here that I've just seen, horizontal at 127. We've got the tops, so it's been resistance. We've got the bottom of the bodies, so it's been support as well. And we haven't even started putting the 50% or fibs on the screen yet either. So, look, I really hope that it just rockets through these levels. But it's purely based on the chart, and I know that they've got a lot going on. They've got Sweat as gas and a number of other projects and fundamentals coming out. But purely based on the chart, it's not great. It's definitely not great. There really isn't too much more to say about Sweat in regards to the price. I am definitely looking forward to the website coming out or being updated to show all the data in regards to inflation, new people being onboarded, steps taken, beforehand, but before joining Sweat versus after joining Sweat, and all that, those sort of data points. That will be really interesting. I'm particularly keen around looking at inflation and seeing what that's like, because we really don't know where it sits. It's a bit of an unknown. So yeah, that transparency will be good to see as well. And sometimes that sort of transparency can actually start bringing people to the market, because they start to have a bit more trust and faith in a project, even though the people may be trustworthy to begin with. Everybody thought SBF was a trustworthy person until he wasn't. Everyone thought Luna was a trustworthy project and investment until it wasn't. And so people get a little bit gun shy about some projects. So I think that transparency does help quite a bit and go a long way as well. I'll just jump in and see if there is any comments in here. I can jump into Nia as well. Have I missed anything that I said I was going to do or that you guys have requested? Oh, g'day, Mystic. Good to see you, mate. We'll jump into Nia, and then I might talk a little bit more about the land cycle. I've seen, I think it was Kitty Pong asked to talk about it a little bit. So Nia is going beast mode. It completely fucked my idea of bagging up some more over here, but that's all good. We can just adjust these charts up, and it moves our buy zones a little bit. Moves them up as well. So it's looking really healthy. It's coming into some resistance again around that $8.50 mark. We might go out to a daily. We can see a little bit more reaction at these levels on the daily. Yeah, so about $8.50 looks to be a key resistance area, because we got rejected over here, and then once it broke through, we got the old pattern. So this $8.50, $8.60 area, which isn't too far off, it has gotten up to $8.30. We could see another push up, particularly if Bitcoin gets up to that 67K region. We could see NIA get up there as well before it starts having a bit of a retrace, which is fine. We want to see it's testing these levels of its cycle highs, the cycle high resistance. There's a lot of coins that aren't even anywhere near their cycle highs at the moment. XRP, we just spoke about Sweat, ADA, Matic, but there's a fairly comprehensive list of coins that are a long way off their highs. So based on NIA, I think it is doing fantastic at the moment. To the upside, we do have some key resistance zones: $9.40, $11.80, $13. They're based on the last crypto cycle resistance zones that I've marked out, and it's not right on $9.40. It's give or take, same as $11.80. It's give or take, give or take 20 cents either side. $13.17, give or take a little bit as well. Definitely not the be all and end all levels. They're just in the zones. It's almost like when I do my purple boxes, they're covering a zone. It's just easier when you identify them with the horizontal lines, because they pop up on the right side of the screen. But I think it's going to take out all of these zones eventually. So, yeah, definitely bullish. We'll jump into the Bitcoin chart. I suspect it may. Oh, I hope it's produced a higher high. Got bloody close. We still could see it. Definitely trading at resistance because it hasn't liked it. Didn't like it over here. Didn't like it over here. But the retracements are getting smaller. It's almost an inverse of what we saw with Ethereum. Ethereum got its reaction off 2,800, then a smaller reaction, and now a smaller reaction again. Whereas why didn't that delete? Whereas we're getting that in reverse. Massive reaction, small reaction, smaller reaction. Now we're getting closer. We're probably looking for a breakout, to be honest, and start testing those levels at $9.40 and $11 and so forth. Time will tell, but yeah, extremely bullish on NIA. So we do have. I actually haven't gone that far back in the chart for NIA before. Okay, well that explains now. That paints the picture a lot better. So was resistance back here, support here, support there, resistance here, and now we're at it right now. So that explains why we're coming into resistance at the moment. That's interesting. But there's really, once it does get past there, you might come into a bit of resistance here at 16,000 satoshis, and then again at 23,000 satoshis. But there's a fair bit of gap in between those levels. And then it went bonkers. That was when I was trading at $22 or thereabouts. So yeah, I think it's looking great. I'll just jump back into the chat. All right, so we'll jump into a bit of land cycle discussion. So I don't know how much you guys have looked into it yourselves. The basic rundown is 14 years up with a pullback in the middle at around the 7-year mark, where there might be like a mini recession of some sort. And then, the second 7-year cycle will continue, or 6.5, 7 years thereabouts. And then you end up in a 4-year downturn period. And the downturn period is sort of until it sort of recovers and starts making that uptrend again. And I'll jump into the US house pricing market. These charts are a bit ordinary to look at, I suppose. I'm pretty sure this chart is on like it's a 3-monthly chart. It's not a weekly chart like it suggests it is. But what I want to look at is, I'm on regular, good, 2008. So this, it had its massive run up from the 2000s, basically. Massive run up. Got to about 2005 after it's had this massive bull run, and it's hit the winner's curse in about 2005. The winner's curse is the final 2 years. That's when your mums and dads are accessing equity in their homes to purchase investment properties. People are adding into their retirement funds as much as they can, buying stocks, buying ETFs, the latest craze. They're all over it before it collapses. And getting in at this point in the market for a long-term strategy is not a good idea. And the reason being is, the market peaked in March 2007, the housing market. The housing market didn't get back above that level until March 2016. So March, April 2007. So it took 9 years for you to then be equal, not even in profit, 9 years to be equal to what you got in the market at back here. So it crashed in 2000, peaked in 2007, bear market starts, didn't get out until May 2011. So that's the 4 years down. And the cycle isn't ridden up based on what happened in 2008. It's derived from 200 years of data between the UK and the US, and this is how they formed the cycle more or less. And it's just amazing how you can see it fall into place. So you got your 4 years down, cycle starts in 2011, it runs up, and in 2020, basically, we had the COVID crash. So I was a bit extended going up. It started in 2011, got a little bit of a blip in 2020, the COVID crash. Housing market wasn't really affected. And the housing markets, when you do get those mid-cycle recessions, generally hold up well. It's the stock markets that typically get a significant pullback. We even saw it. The data doesn't go to that far enough back, but so if this peaked in 2007, so around 2000, and we'll jump into the SPX chart in a minute, but around 2000, there would have been a bit of a correction, give or take, somewhere around there. But the housing market didn't feel nothing. It only cops it at the end. So we've got 2011. And now we're in 2024. So you go 14 years up with maybe a 1 year recession in the middle. So that will give you about 15 years. Puts you at around 2025, 2026. And that's where we're starting to get close to now. Now we'll jump into SPX, and I'll go to a 3-month chart so we can see what happened here. All right, so it was about March 2007. We had the crash, or the housing market peaked. So that would be around this candle. It's interesting, when the housing market peaked, the stock market kept going up. So that would suggest that the stock market lagged the land market or the housing market. Because by this stage, the housing market was already going down when the stocks were just peaking. And remember how I said we have a mini recession at about halfway? Well, this is what happened in the year 2000. Had a recession, pulled back. The pullback lasted nearly 2 years before it continued up and formed a double top in this instance. The difference between stocks and housing is that the recovery for stocks are a lot quicker. The drop falls later. The drop's more steeper, more significant. It dropped. Get our tool out here and have a bit of a look. 58% was the pullback for SPX. But it peaked in October 2007, and by January 2009, it had bottomed. So that's an 18-month correction. It's maybe a little bit less than 18-month correction before it took off. If you invested at the top, you were back even about 5 years later, 4 years later. No, yeah, about 5 years later, 5.5 years later. you're back in profit, as opposed to the 9 years it is for the land cycle. But the difference is that if you got in at the top and you've just lost 60%, you could be out on your ass. You might have sold, got fearful, losing so much money. Whereas the housing market, I can't remember specifically, but I think it may have retraced around 30%, 35%, something like that. You might be living in the house, you may have tenants or something to that effect. You may be less inclined to sell the property, and you're more likely to maybe ride out the wave. Although the time for riding out that wave is a lot more difficult. But we then had, so the cycle low was in 2009. And then we see here in 2020, we had our recession, COVID came and hit. That's the correction. Took off again. And then 2022, we had another correction. That's just forming a higher low, another high low, and it's taking off again. So we're starting to get to the pointy end now. I think we've got the runs up here, the decent correction. This decent correction here it's pretty much the same significance as what this one is and this one is, although this one lasted quite a bit longer. So for me, I think with the stocks, I'm sort of looking at around 2026 at some point. There is some people in the space that follow the land cycle. They think that the stocks are going to perhaps run even up to 2 years past the housing market peaking and crashing. But based on what happened in the last run in 2007, I'd prefer to urge on the side of caution and sort of get out around that maybe 3 to 4 months after it looks like the house prices are starting to drop off. I don't want to nail the peaks. I'm happy to get out. Back here somewhere, and lock in those profits. I don't want to be caught in a decent, significant pullback like this where you lose 60% of your gains. I want to be getting out here and then start DCAing back in around this candle, something like that. Once it's had a about a 35% pullback, give or take, something to that effect. That's when I'll be looking to get back into the market, and I'll just DCA back in slowly. DCA in this whole move. Your average might be a little bit higher, but at least if you're DCAing, you're not going to be jumping in here and then watching all your funds drop out. You're going to be getting in a little bit. And, you use a bit of a pyramid scheme. So when you start, you put in a little, you get in with a little bit. As the price drops down, you chuck in a little bit more, gets down lower, you chuck in more again. But you're not just throwing it at the wall hoping it's going to stick. You're going to use technical analysis to determine, all right, where is this price going to go? So in this instance, it didn't get a close below these lows. It did wick below, but it didn't get a close below these lows. So you would have used this as when you're going to be aping in at this point, especially when it closed above the low and then got a green. You're really going to be eating the 2-minute noodles to try put everything you can into it, as opposed to the unlucky winner's curse people who were probably on 2-minute noodles, chucking everything into the market up here because they think it's going to go to the moon. Those people have probably ended up homeless or something quite bad. But that's a strategy I'm going to be using. But the land cycle, in my own words, there is a book that I chucked up in the premium. There is a book I put up in the premium chat. I'll just go over to it. It refers you to The Secret Wealth Advantage. It's an amazing book. Even if you're not a reader, I highly recommend that you read this book to get an understanding of how it works. It's quite like reading for this type of book about economics. It's not. There's no action-packed drama or anything like that in the book, but as far as learning, it's quite well structured. You'll finish reading it and have a good understanding of what to expect, as opposed to, where is it? The Secret Life of Real Estate and Banking. This book is a lot harder reading, but this gives you a comprehensive understanding of the history of the land cycle, when it started, how it started in the US, and it sort of takes you on the journey to be completely across the cycle and what it entails. Sorry, was someone saying something? No. Yeah, that's correct, Nomad. And 9 years to get back to equal without taking inflation into account, and that's sometimes the biggest killer. Yeah, you might have thrown $1 million at it, and then 9 years later, your $1 million is only worth 750, but it still says $1 million. So in your head, you're like, I'm even, but you're what you can do with it is actually significantly less. Nice on Baldrick. Did anyone have any questions about the land cycle or about anything that I've sort of discussed so far? Yeah, no worries, mate. Oh, well, I think that probably might draw us to a bit of a close for today. I'd love to see what some of your own thoughts are on Bitcoin, and what it's going to do, how it's going to do it, that sort of stuff. Even if you guys want to have a bit of a play with the all-time high methodology that I posted up in the educational section down here. Yeah, even if you guys want to have a bit of a play using the method that I've sort of put in there for testing it against some random altcoins like, I don't know, Injective or ADA or whatever it might be, and chucking it up in the chat, and we can have a chat about it. Yeah, I'd love to see that sort of stuff. I'll probably do it on the next catch up. I'll use Sweat as an example because we're all probably invested in Sweat, but this process does work a little bit differently for dApps that are on layer ones or layer two protocols as well. You can still use this method, but you can also try to fine tune it a little bit more. But I'll do Sweat on the next catch up, and then that way we can record it and post it up in the channel as well. But I think for now, I might love yous and leave yous, and I might get to bed over here. It's almost 10:30 at night, so, and fly out day tomorrow, which is good. All right, guys, take it easy, and I'll see you next time.